Hello, everyone. This is Bishop from Morphe Trades, and I'm here to talk to you today about a simple thing that we can all do that will increase profitability and extend our life in this market. And that one very simple thing is trade journaling. But why? Because trading isn't just about numbers on a screen, it's about the stories those numbers tell. Each trade, whether it's a triumph or a stumble, holds a lesson. And when you write down your thought process of why you entered, where you placed your stop, and how you felt in that moment, you transform a decision into a concrete lesson. And suddenly your trades aren't just entries on a report, they're chapters in your personal trading manual. Journaling creates accountability. It's easy to convince ourselves afterward, you know, was that loss just bad luck or was that win just pure skill? But when you put pen to paper or fingers to keyboard, you reveal the truth. You see that you moved your stop out of fear. You discover that you ignored your own rules when you felt the market would turn in your favor. Over time, these patterns become impossible to ignore, and accountability will breed discipline. Journaling will sharpen your self awareness. Emotions are the trader's silent partner. They guide us, but often in the wrong direction. And after a string of losses, frustration builds and suddenly you're over leveraging. Or after a streak of wins, overconfidence sneaks in and you start chasing trades. By noting your emotional state, whether you're confident, anxious, tired, you begin to predict how you'll behave under pressure. You learn to spot the warning signs and hit pause before emotion derails your plan. Journaling fuels continuous improvement. Imagine reviewing your journal at the end of every week. You mapped your common entry setups, you tallied your average win versus your average loss, and you analyze which setups truly work for you. We can call this objective performance tracking. And through it, we can measure our real win rates, our average R&R, our expectancy, and our drawdowns. We could also spot which setups work best and which bleed us dry. We'll identify recurring mistakes, whether it's catching systematic issues, like chasing breakouts or fading trends too early, or maybe recording our emotional slip ups, getting impatient moving stops, or revenge trading. Maybe you'll discover that breakouts in trending markets yield 60% wins, but mean reversion in choppy conditions only wins 30%. With this data, we will refine our strategy and lean into what works, and we will avoid what doesn't. And through the reinforcement of positive behaviors, we'll be able to look back at our journal in 6 months and see real progress, tighter risk management, better entries, steadier emotions, and we'll know we're becoming a better trader. It's all been built one documented trade at a time. One of the most important things that journaling does is that it preserves institutional memory. And as the markets evolve, and all the platforms change and all the indicators get tweaked, your journal will remain a constant record of what truly has driven your success. And consistency will breed consistent results, and your journal will become a personalized trading playbook of everything that is great about your strategy. But how do we start? On the most basic level, there are spreadsheets like Excel and Google Sheets, digital notebooks like Notion or OneNote, and specialized tools that we can find online, TraderView and TraderSync. I will post a video later on TraderSync. I found it to be quite exceptional and easy to use. And I think everyone should at least give it a try because it's got a 7-day free trial. And I'm not affiliated, it's just my personal opinion. At a bare minimum, we should be keeping track of the date and time of our trades, the ticker, the contract, the direction, whether we're long or short, our entry and our exit, our R and R, our setup, our emotion behind it, and then maybe a note or two stating, what was the outcome and maybe there's something we can be learned from it. And over time, you'll have a rich archive of insights tailored to your style. In closing, I'd like to say that trade journaling isn't just some extra task, it's our compass. It'll turn all of our random trades into a coherent journey, our mistakes into milestones, and that data into wisdom. If you want to elevate your trading from just guesswork to mastery, you should pick up your pen, open your journal, click a link, or whatever your path is. Your future self, smarter, sharper, and more resilient, will thank you. Until next time, this is Bishop from Morphe Trades. Thanks for watching and happy trading.